Business owners, it's time to talk about one of the most powerful deductions still on the books, the qualified business income deduction, also known as QBI. And here's the good news. I love good news. In 2025, you still have the chance to leverage it. But here's the catch. If you do it wrong, you could lose out on it completely. That's why in this video, I am going to give you 4 ways to lock in QBI tax savings this year, plus the common mistakes that can wipe it out. So stick with me because I'm going to break it down step by step with real examples you can use. But before we jump in, I'm gonna need you to like, comment, and subscribe because strategy beats stress every single time. What is QBI and why does it matter? QBI allows eligible businesses to deduct up to 20% of their qualified business income. That's not a credit, it's a direct deduction of your taxable income. It's available for LLCs, S Corps, partnerships, and sole proprietorship, but it's not available for C corporations. Let me give you an example. The Treasury Department estimates QBI deductions save small business owners more than $40 billion every year. Let's look at a consultant, a solo marketing consultant earning $120,000 can use QBI deduction to deduct $24,000 right off the top, reducing taxable income to $96,000. That's huge. What you want to do is verify your entity type today. Don't assume you qualify. Check if your structure allows QBI. Now that you know what QBI is and why it matters, let's dig into the first rule that can make or break your eligibility, the income thresholds. In 2025, phase-outs began around $191,000 for single filers and $363,000 for joint filers. If you're above the limit, the deductions start to shrink, especially if you're in a service-based business. Certain industries like law, consulting, and accounting lose QBI eligibility faster than others. Let me give you another example. Let's say a marketing consultant making $200,000 might only get a partial deduction unless they structure expenses strategically. A retailer that owns a boutique shop making $400,000 and files jointly can still access QBI, but only if they stay under the phase out with smart expense planning. This is what I need you to do. Forecast your 2025 income right now. If you're likely to hit the phase out, don't wait until tax season, my friends. If you're close to the limit, don't panic. There are strategies you can use to bring that taxable income down and stay eligible. One of the most effective is using retirement contributions. Using retirement contributions to stay eligible, like SEP IRAs, solo 401ks, or simple IRAs, directly lower your taxable income. That means you not only build long-term wealth, but you can also slide back under the QBI threshold to keep your deduction. It's a double win, a tax deferral plus QBI access. Let me give you another example. Let's say a business owner who maxed out retirement contribution can reduce taxable income by $22,500 as much as $66,000, depending on the type of plan. A consultant projected to make $400,000 in 2025 just over the joint filer phase out funds a solo 401k that drops the income below the threshold, preserving the full QBI deduction and saving tens of thousands of dollars. This is what you need to do. Open and fund your retirement account before year end to take advantage of this strategy. But what happens if you're already above the income limits, even after retirement contribution? That's where wages and assets come into play. You want to optimize your W-2 wages and assets. If you're over the threshold, your QBI is tied to how much your W-2 wages are and what qualifying assets your business holds. Paying yourself a reasonable wage through actual payroll can increase the allowable QBI deduction. And assets like real estate, equipment, or even computers in your business may help you qualify under the QBI rules. Let me give an example. Let's say we have a real estate investor and landlord holding 2 million rental properties inside of an LLC can often use depreciation as part of the QBI formula, even though rental income is passive. The right structure allows QBI savings. Here's another example. Let's say that you are a store owner paying staff $150,000 in W-2 wages and holding $200,000 in fixtures and equipment. You may preserve QBI even with high income. This is what you need to do. Work with your tax strategist to balance payroll versus distributions. The right mix can save you thousands in taxes. Of course, even if you're eligible, it's easy to lose QBI if you fall into some common traps. So let's cover those mistakes next. Avoid common mistakes. Here's one. Mixing personal and business expenses can kill your deduction. Misqualifying contract payments as wages or vice versa creates a red flag. And the biggest mistake of all is ignoring the phase outs until it's too late. Allow me to give you another example. A business owner realized in December they were $5,000 over the QBI limit. By then, it was too late to adjust the income, timing, or increase contributions. They lost thousands in deductions. I had a consultant, a financial coach, who waited until tax season and discovered they disqualified themselves from QBI by failing to track income mid-year. Quarterly planning could have saved them thousands, but let's not let that happen to you. What you need to do is schedule quarterly check-ins with your tax strategist. That way, you can monitor your QBI eligibility throughout the year and not just when tax season hits. Now, we've covered the basics, the thresholds, retirement planning, wages and assets, and even mistakes to avoid. Now, let's wrap it all up so that you can get the big takeaway for 2025. The QBI deduction is still here in 2025, my friends. But let's make sure while you can that you plan strategically to keep your income in check and work with the strategist to maximize savings. If this breakdown and this video helped you, I want you to like, comment, subscribe, and share this video with another business owner who can benefit. And if you, my friend, need help applying the QBI strategies to your own business, click the link description to book a consultation with me and my team. When you know better, You do better.